to Altos Research. We're going to have a conversation about what is a rolling recession. We're going to talk about Biden's proposal for $5K tax credit. That and much more on your daily financial news. I just realized that my hat's not very visible. Anyways, got to do the work. So let's start off with the latest from Altos Research. They do a great job of reporting housing information weekly. If you want to give them a follow on Twitter or X, it is highly recommended. From Altos Research, active inventory is up 1.1% week on week, 24% year on year, and interestingly enough, up 102% in 2 years. Yes, folks, 2 years ago, we were at the depths of inventory. We were getting bidding wars and craziness was ensuing. But what happened with new listings for the week? New listings were 60,000 new listings. However, something we talk about is pendings, right? So 60,000 new listings. We had 67,000 new pendings. Now, of course, all of those pendings will not close. There are lots of reasons that transactions fall apart. But I find it interesting that pendings are once again, new pendings are once again above new inventory. The last thing to mention about this week of data. This week of data was put together before rates fell below 7%. I believe we will see the impact of rates in the sixes, not really this week, but the following week. It takes a while for the consumers to really figure out what's going on. I will be staying tuned to what Altos Research is sharing every week, frankly. But the next 2 weeks, like 2 weeks from now, we're going to find out, is marginal demand coming back? And where will we see it first? We will see it first in pendings. That's where I will be looking because, again, it takes a long time for closings, all of those things. Will pendings really shoot up? My guess, prediction, whatever, smoke signals, crystal ball, says that we are going to see pendings accelerate a bunch in 2 weeks. Again, this week, 67,000 new pendings, 60,000 new listings. We will see where we go from here. New in contract up 4%, 390,000. Price reduction, Mike at Altos Research is telling us to watch this. Price reductions are ticking up. They're now at 31.4%. Long run historical average, of course, is 33%. Again, it is ticking up. Mike is highlighting it, so I bear witness that he knows what he's doing. So let's keep watching price reductions. How about Chris Williamson? I don't know if you watch Chris Williamson. He has an amazing podcast and amazing guests. I heard a quote from him the other day that I thought really resonated with me. Hopefully resonates with you, the One Rental at a Time community, with what we are trying to do, what I am hoping to bring to you each and every day. This is Chris Williamson. I believe he was quoting someone else, but I did not catch the name. Chris said, "The magic you are looking for is in the work you are avoiding." A lot of you come to this channel thinking about becoming a real estate investor, thinking about be doing more things in investing. Again, the magic you are looking for is in the work you are avoiding. Do you have a buy box? Are you looking at it daily? Do you know how much discretionary income you have? Do you do just all of these things? We try to give it to you each and every day, but which of the things that we talk about are you avoiding? If you need some help, you need some role models, you need to get in good communities, buy the course, join the Facebook group, all of that. But that hit pretty close to home for me. How about Case-Shiller? The doomers and crash bros keep telling us a crash is coming. Well, not this month. Case-Shiller says that year on year, prices were up 6.1%. I'm sorry, they last were up 6.1%. Sorry, Sonny wants to say hi to you all. What are you doing? You just not happy? Yep, Sonny wants to come in and say hi. So Case-Shiller last was up 6.1. Expectation was 6.7. Actually came in at 6.6. No, you're not supposed to play with the microphone. So again, and it was up 0.14 month on month. So again, I am hoping for 2024 to be a flat price model. We need to fix the housing market. We can't do that if prices keep going up and up and up. But yes, that was what Case-Shiller brought. We did get U.S. durable goods. This is not a number that you and I talk a lot about, but let's talk about what is a durable good so you understand the importance, and then talk about what happened. So a durable good is something that is bought infrequently and typically lasts 3 years or more. Think electronics, think a washer and dryer, for example. So again, this is often something that economists like myself look at for the health of the consumer. Hey buddy, how you doing? Oh yeah, the bridge collapse. I'm sorry about that. I saw a clip of that. That's horrible. Horrible. Pray for all the folks that were impacted by that. If you guys haven't seen it, there was a cargo ship that took out a bridge. I don't know how that happens, but yes, pretty horrible event. But back to durable goods. These are not purchased often and last 3 years. So again, it is often somewhere that consumers, you and I, will cut back. Like, hey, I'll wait to get a new fridge. I'll wait for a new washer dryer another year, right? So durable goods were, let me get the number, they were estimate to be up 1.2%. They were actually up 1.4%. It is important to note that last month they were down 6%, 6.1%. So very, very interesting. Man, Sonny, you're getting heavy. So let's talk about a rolling recession. This is something, again, I think is becoming more and more likely. I'm not calling it the base case yet, but it's something I feel like you and I have to talk about because rolling recessions are not normal. A lot of economists talk about 1991 being the last time there was a rolling recession, and kind of. But again, this is something you and I should talk about. So what is a hard landing, or AKA a typical recession? I'm going to read the definition. Typical recession is a significant decline in economic activity that spreads across the economy, lasting more than a few months. This is what we had in the Great Recession, what we had in the dot-com bust, and many others. It took out the entire economy. Consumers, the backbone of the economy, pulled back. Everybody was afraid. It was simultaneous and comprehensive. That is your typical recession. That is what most of us are used to. Now, a rolling recession. A rolling recession is more staggered. It is impacting different sectors at different times. And I don't know about you, but when you see what's happening, certainly in our industry of housing, it certainly feels like it was in a depression. We saw real estate transactions fall from 6.8 to, what was it, 3.8, 3.9 million. Certainly depression levels when you get cut 50%. We've seen manufacturing contract. We've seen other parts of the sector. So again, I think we need to acknowledge that we might all be looking at historical charts and evidence and the yield curve and all of these things, not realizing that this time the economy might be in a delayed rolling recession. A rolling recession means that GDP doesn't necessarily go negative. It means certain sectors, again, staggered sectors, will go into recession or decline as others are growing. Again, let's talk about housing. With what is going on in housing today, we are seeing more and more transactions. We should do 4.2 to 4.3 million in existing home sales. We might do 650 to 700,000 new home sales. That is an improvement. We are actually having housing be a net positive to GDP, while other sectors may be in contraction. So again, I think it is important to think about a rolling recession, because if you're making investment decisions and you are one of those bears or doomers or whatever, and all you think about is the next great recession is coming, you may make decisions that are ill-timed and unfortunate. So again, just think about it. I'm not predicting one way or another. I'm just saying it's more likely than it was a year ago that the U.S. will go through a rolling recession. And the biggest thing that I think the doomers are not talking about, frankly, is M2 money supply. M2 money supply, if you don't know, has been contracting, but if you zoom out if you zoom out, you can see just how much money is still in the system. And I do think it is that excess money printing, creation, whatever you want to call it, from the last 2 years, that is like the pig and the python, or whatever the analogy is. It is going to take a long time to kind of chew through that. So I am not one that thinks the decline in M2 money supply is the call for the next Great Depression. What I would tell anybody who thinks that is, please zoom out. Yes, M2 is negative. Yes, M2 is negative for the first time since the Great Depression. I get it. It's a catchy headline. But zoom out. It is still positive. It's just not as positive. And we have so much more in there. And again, if you haven't figured out that inflation is a feature, not a bug, you will make unfortunate decisions and be left wondering what happened when time comes. So again, that's what a soft landing is. How about President Biden? We need to talk about his $5,000 tax credit, which I hear will be $400 payments for 2 years. So again, it's like 10 grand, I guess, 9,600. His prediction is that this credit will help 3.5 million people buy a home. This will help 3.5 million people buy their first home. Frankly, that math doesn't calculate to me. So again, just if you put it out there, 3.5 million over 2 years is 1.75 million every year. As we heard, what was it, last week? Home sales, the new home buyers were only 26% of the market, where historically there are 40%. So I agree with President Biden. He is looking at the right area, first-time home buyers. Unfortunately, I believe you fix it with supply, not more demand. What happens when you have a constricted supply and you give people free money? What happens? The people who can compete use the free money to pay even more. So I am not one economist who thinks you fix the housing market by creating more demand, especially more demand in the most acute pain point, entry-level homes. I think it is a recipe for higher home prices, higher rent, and sticky inflation. I do not think it is a good idea, but again, no one asked me. So again, I think you fix it by supply. Let's encourage home builders, both big and small, to build entry-level homes. Take that $10,000 or whatever it is, lower the building permitting process or zoning or whatever it is. We need more homes. To that point, John Burns Real Estate Consulting put out an excellent piece. John Burns Real Estate Consulting said, we need 1.86 million new homes built every single year until 2033. I'll say it again, I'll use round numbers. We need the home building industry to build 1.9 million homes a year for the next 10 years to get back to supply-demand balance. Unfortunately, builders are only building 1.4 million. So every year we are falling 500,000 units behind. And here's the deal. The builders know what they're doing. The builders know what they're doing. They are not building supply to match demand, hence their profit margins, hence all of these things. It's simple business 101. We need to fix that, President Biden. We need to fix that. A couple other things to point out. Is the economy slowing down? I don't know if you saw this. We heard from Gucci last week that China demand is down 20%. Apple says, hold my beer. Apple says iPhone sales in China down 33%. Yes, folks, I do believe the Chinese economy, especially the middle and upper middle class, the people with discretionary income are scared. Their housing market is atrocious and only going to get worse from here. So they are being conservative. They are pulling back. If you want to see how a recession occurs, get the upper class and middle class to not buy their iPhones, not buy their Guccis. You are seeing the consumer pull back. Again, remember, in the United States, the top 20% account for 50% of discretionary spending. If the top 20% pull back like it appears in China, bad things will happen. Then last thing to talk about, UPS CEO just this morning says that it appears that the small package industry is poised to return to growth in 2024. Apparently in 2023, you and I were traveling. We were not buying and shipping cardboard boxes. According to the UPS CEO, that is now turning around. Alrighty, folks, like, subscribe, become part of the family. For the folks that bought the course yesterday, I have already given you access to the Vegas event. One of you actually purchased the course plus the 30-minute mentoring. I went ahead and gave you the Vegas event, the buy box, and something else. So again, if you want to become part of the family, buy the course. I'll give you some free stuff. Join the Facebook group. Do the work, do the work, do the work. Remember Chris Williamson, the magic you are looking for is in the work you are avoiding. That's what we do here. We talk about the buy box, discipline, getting in front of groups that are doing the same thing. Thank you for being here. We got 122 people watching at the moment, 25 thumbs up, and I hope you have a great day. Later.